Yo, what is up, fam? I just wanted to outline Friday the 23rd. So, first things first, I just want to show the little Discord. So, we were taking something like this, looking previous day, January 16th, consequent encouragement. And then I believe I did close it out early. Or no, the target, I'll just fucking just roll with them. I added all the ads. Target. And then now here's the original trade that we should have taken. First present for value gap 940. Regular trading hours, sell side sweep, body closure below, confirmation breaker with our London buy side pool. If you go extended trading hours, London buy side pool. And then I have all of the outlines. For value gap, turned breakaway because we never actually turned back to it. There's no wick. Volume inversion from 943. Immediate rebalance 957. Volume inversion, suspension block volume inversion. So when there's two volume inversions like this, 9:58 a.m. volume inversion on each side, that's a suspension block. Volume inversion, very bullish. You see how price wants to go somewhere. And then breaking. You could literally see fair value gap here. 1 minute, 10 a.m. Volume inversion, volume inversion. I call that because you could see the wick here at 10 a.m. and then the wick on the 10:01. I would just use this as a fair value gap, not a suspension block. And then you could see price comes in, creates this suspension block 10:02, accumulate before taking the true buy side. Look at time, 10:10, right after macro, 9:15, 10:10 macro. It's an accumulation buy side, major buy side. London liquidity creates this fair value gap, which again, you could see was a breakaway. Entry. These were the entries here. Right here. See 1040, 1042. Oh no, it was up here, my bad. I get confused. And then that daily wick, consequent encouragement. Target within 10 o'clock, 11 o'clock, silver bullet per ICT. Original entry first present fair value gap after sweeping sell side liquidity from previous day settlement price. Simple bullish day. And for anybody that wants to see 817 ticks if you did do it accordingly. So, and then of course we have our reversal model right before taking the upper quadrant out. So you failed to get to the upper quadrant of the higher time frame daily wick. Create that fair value gap. Macro 1150, 1210. Could take your target there. Call that your trade at macro. I was trying to short this a little bit. That's where these trades were after. Wow, it's like magic. Imagine if I was like, oh my god, how Trader in this title. Oh my god, that's so funny. Because what was that? That's 3 contracts off. And I had it below break even. I think this was like, yeah, whatever. Hindsight only, you know what I mean? No algorithm exists. Everything's fake. Everything's demo. Prop firms aren't even real. Literally, they're demo accounts. We're all demo traders. Only thing we're doing is managing our risk. But I'll show you that daily wick here. Daily wick. Our target 50%. And then the trade to it, first percent for value gap. I mean, if you also look, 950, 1010 macro gave you that previous day high or previous day settlement price. Rip. Whatever the case is. Yeah, previous day settlement high or previous day start high. My bad. I'm fucking tripped. No, we didn't even touch it. My bad. Anyways, you could see within macro. That's the target I fucking talking about. So afternoon high. This is afternoon session. Afternoon high, afternoon low. Liquidity taken. Buy side liquidity. Sell side liquidity. Okay, I think you guys are starting to get it now. Don't fall for their $2,000 mentorship.